When I talk about taxes and retirement with my clients, I get a lot of pushback, and I'm not sure if it's because they don't want to deal with the future. They're more concerned with their taxes now. They want to know how they can mitigate their taxes today to decrease their tax burden. And I'm not exactly sure I disagree with them. But unfortunately, tax risk has become an increasingly hot topic for retirement as we're expecting the tax rates to go up. And I'll explain why in this video. By the end of this video, I'll give you the facts so that you can understand better why you need to mitigate your taxes in retirement so that there are no surprises and you're not having to share your retirement accounts with someone like the IRS. I'm also going to explain how a retirement annuity can help. Hi, my name is Darlene Hartman. I'm a CPA and founder of D. Hartman Consulting, LLC. For the best retirement annuity advice, subscribe to my YouTube channel and hit that notification bell so that you can receive notices anytime I post a new video. My goal for your retirement is for you to obtain some certainty around your retirement. I mean, you've worked really hard to save for your retirement and would hate to see circumstances beyond your control dissipate your retirement savings. If you look up the definition of retirement, it's ceasing employment, enjoying life, not having to be controlled your decisions on a day-to-day basis by someone else. So I want to help you obtain financial freedom and control over your own money. First way to do that is to not rely on the government to provide for your retirement savings. Take control of your own retirement savings. Secondly, I want to bring awareness to you about the retirement risks, including tax risk, so that there are no surprises in your retirement. I mean, who wants to be enjoying life when Uncle Sam comes knocking at your door to collect his tax money? Have you read David McKnight's book, The Power of Zero, or seen his documentary film, The Power of Zero, The Tax Train is Coming? Well, he talks about how you can get to a zero tax bracket in retirement. Well, there's tax risk resolved for you there. So now we can move on to other retirement risk, right? But how easy is it to obtain a zero tax bracket in retirement? So it's going to require a lot of tax planning year after year after year. And there's still no guarantee that you're going to get that zero tax bracket. So why is that? Well, if everything remains static and the only changes that you had to factor into your tax planning were the changes that were going on in your own life, such as a job promotion and a raise, then that would make tax planning pretty simple. But unfortunately, there's a lot of factors that are not under your control that will impact your retirement savings. The government has been quite busy with legislative changes, including changes to Social Security. So how do you know how much to expect from Social Security at the time of your retirement? In addition, it's acts such as the Secure Act, which is making drastic changes to your retirement savings and your legacy planning that is causing tax risk to be a more vital part of your planning for your retirement portfolio. I will be discussing the Secure Act in future videos, but I do want to note that the Secure Act is one of the reasons why David McKnight's book has become quite popular of recent. I wanted to give you a visual representation of what the highest tax bracket has been in history, starting from 1913 all the way up to 2021. And I also labeled the events that have occurred which caused those tax rates to go up to 70, even as high as 94%. So leave me a comment in the section below and let me know how high you think the tax rates will be going in the near future. Also, if you're enjoying this video, be sure to give me a thumbs up, subscribe to my YouTube channel, and hit that notification bell so that you can receive notices anytime I post a new video. Now that you've seen the tax rates as high as 94%, what are you thinking about the current tax rate of 35%? Are you now thinking that it's better to pay taxes now at 35% rather than waiting until you withdraw money from your retirement accounts and possibly be paying much higher tax rates? I'm not sure anybody can tell you what the fate is with respect to how much our tax rates are going to go up, including David McKnight. But I do know that it is not under our control. It is the government's decision. And I do believe our tax rates are going to go up. By how much? I don't know why I still don't have that crystal ball. But then again, it's always good to be prepared for those tax rate hikes. Are you seeing some tax planning strategies in your near future? Now, since this is a channel on retirement annuities, of course, I've got to talk about how a retirement annuity can assist with respect to tax risk. So in my video, Tax Advantages for Retirement Annuities, I mentioned that the tax advantage for a fixed annuity is the fact that you can delay taxes during the deferral period or the period where it cooks. But once you start receiving those guaranteed income benefits from that fixed annuity, you start paying taxes. The exception would be if it's included in a Roth IRA, and as long as you set up that Roth IRA in accordance with the IRS guidelines, you no longer pay taxes on that Roth IRA, even if you include a fixed annuity in that Roth IRA. So to sum it up, a retirement annuity provides you financial security and certainty in your retirement by providing you guaranteed income. But the superpower for the retirement annuity is the fact that it can provide you that guaranteed income for life if lifetime income, but you have to set up the contract as such. But there's an additional benefit that a retirement annuity can provide you with respect to tax risk. You can see from this graph that an IRA with a retirement annuity representing 35% of your account balance, which is demonstrated by the orange line on the graph, resulted in a higher ending balance after 20 years and a much higher performance than a fully diversified portfolio of stocks and bonds. The reason why? The guaranteed income from the retirement annuity resulted in about $176,000 more in withdrawals from your IRA over 20 years than a fully diversified portfolio, thereby providing you excess cash to assist with the payment of taxes on your retirement portfolio. So that's where a retirement annuity can help in the battle against tax risk on your retirement portfolio. Now, I wouldn't dedicate an entire video on this topic if I didn't think it was important. It doesn't matter how much you have in your retirement savings account, you need to be prepared to mitigate your taxes in retirement, because that is just one of those key retirement risks that can wreak havoc on your retirement savings. So don't be giving up a whole bunch of your retirement savings to Uncle Sam. Do something now to help mitigate that tax risk for your retirement portfolio. So if you're wanting to talk about some tax planning strategies, or you're interested in obtaining some retirement insurance in the form of those contractual guarantees that a fixed annuity can provide you, click the link below to apply to become my client. Also, if you enjoyed this video, be sure to give me a thumbs up, subscribe to my channel, and share it with your family and friends. Thank you for watching. Let's get the conversation started on how you can live your best retirement while not outliving your money.